Okay, let's unpack this Lobo EV Technologies, ticker Lobo on the NASDAQ Q. This morning, May 13th, 2025. This stock didn't just move, it absolutely erupted.
Yeah, a surge of what, over 130%? Intraday highs even higher, like 250%. That's dramatic.
It really is. And it makes you wonder, right, in this whole EV space, what drives that kind of, well, volatility? Is this a real opportunity or maybe just, a flash in the pan?
Well, that kind of price action, especially in a single day, it often points to some big news or maybe a sudden shift in how the market's viewing the company. It definitely warrants a closer look.
Exactly. And that's what we're here for. Welcome to the deep dive. Think of this as, well, your personalized analysis. You shared your sources, articles, research reports on Lobo EV, and our mission is to pull out the key insights for you, help you get informed fast.
Right. Today, it's all about Lobo EV Technologies. We need to understand their business, their financials, where they sit competitively, and what their future might hold.
It's your shortcut to getting a handle on what's going on here.
And looking at a company like Lobo, especially in such a dynamic sector like EVs, it can teach us a lot, about innovation, risks in new tech, global market forces.
So for you, the listener, this deep dive should really shed some light on whether that huge stock surge has, well, legs, or if it's just speculative froth.
Agreed.
So how we're going to tackle this, we'll break it down into two halves. First half, we'll dig into the core business, check out the management team, and really scrutinize the financials.
And then in the second half, we'll look at market sentiment, who owns the stock, and do a kind of SWOT analysis, strengths, weaknesses, opportunities, threats.
Sounds like a plan. Ready to dive in?
Let's do it.
All right, Chapter 1, Understanding the Business. So Lobo EV Technologies, they're based in Wuxi, China. They make electric mobility stuff, e-bikes, e-mopeds, e-tricycles.
And those electric off-highway shuttles, too, right? Like golf carts, mobility scooters, that kind of thing.
Exactly. But here's an interesting twist. They also have this software side, kind of a leftover from when they were Lobo AI Technologies. Software royalties, development services, mostly for automotive electronics.
Okay, so not just hardware. They IPO'd back in March 2024, so they're still pretty new to the public markets, definitely a microcap.
Right, and a really significant recent development, they're diversifying into AI-driven medical beds.
Medical beds. That sounds like a completely different direction.
It is. They've got a partnership with a U.S. company, Roundtree Lab, based in Wyoming. Lobo manufacturers. Roundtree handles the AI and the U.S. market side.
Wow. Okay, that's ambitious. Let's maybe circle back to the core EV products first, though. You mentioned a diverse range.
Yeah, they covered a lot of ground. Urban commuting, light cargo, vehicles for the elderly or disabled. And they really pushed the intelligent angle, AI, connectivity, multimedia features.
So they're trying to differentiate with tech.
Seems like it. They highlighted this high-speed electric motorcycle. Apparently got good feedback at the Canton Fair this year. Hits 160 kilometers per hour.
That's pretty quick for an e-bike.
Yeah. And they've got new recreational four-wheelers, plus this XEODU e-trike that apparently has some international supply deals already.
So the product portfolio is wide. Does that spread them too thin, maybe, for a microcap?
That's a fair question. Their main revenue is definitely the electric vehicles and accessories sales, that software segment we mentioned. Well, the focus seems heavily on the hardware now. Details on the software side are a bit opaque in the recent materials.
Okay. So is that software piece still a core part or more of a legacy thing? Hard to tell from the outside, maybe.
It seems less emphasized lately. But back to that medical tech venture. It's a big deal.
It sounds it. What's the potential there?
The projections are pretty substantial. They're talking $11 million in sales the first year, $27 million the second, and potentially $50 to $88 million in year 3.
Whoa. Okay, for a company their size, that's massive potential revenue.
Huge. But, like you hinted, it comes with totally new risks. Medical devices, U.S. healthcare regulations. Roundtree Lab is apparently starting the high pay compliance process.
Right, high pay. That's crucial for patient data in the U.S. And they're completely reliant on Roundtree for the tech and market access.
That's the deal. It's an exclusive manufacturing agreement. Lobo builds, Roundtree sells, and manages the tech side. It's a high-risk, potentially high-reward situation.
Definitely a lot riding on that partnership working out. Okay, let's zoom out a bit. What's the industry landscape like for their core EV businesses?
Well, the China electric two-wheeler market is the biggest in the world, and it's shifting towards higher tech stuff. So Lobo's focus on intelligent features seems to fit. There's even a regulatory push for smarter e-bikes.
Okay, that aligns well. What about three-wheelers?
Also strong growth in China, and Asia-Pacific is the biggest and fastest growing region globally. So favorable trends for their e-tricycles, too.
Good. And the off-highway vehicles,
Yeah.
golf carts and the like.
That market's seeing strong global growth projections, too. Trends like better batteries and connected tech play right into what Lobo says they're doing.
So the market dynamics seem generally positive across their segments.
Generally, yes, but the whole micro-mobility space has drivers and restraints, right? Environmental concerns, urbanization are pushing it. But high initial costs, complex rules can hold it back.
And Lobo's trying to thread that needle with affordable intelligence.
That seems to be the strategy, balancing features and price. Now, competition.
Yeah, who are they up against?
They say their edge is product design excellence and advanced technological integration. They did boost R&D spending hugely in FY 2024, over 500%.
Okay, putting money into innovation. But who are the big players?
Competition's intense. In China, you've got giants like Yadea. Globally, names like Volcon, EasyGo, Elrovaru, Massimo. Lobo is, the small fish here, a microcap.
Right. Big difference in scale and resources. What about barriers to entry?
High capital needed for battery production, complex regulations. Lobo seems focused more on assembly, maybe to lower those hurdles.
So their competitive moat, their advantage, this maybe not quite dug yet, more aspirational.
That's a good way to put it. The R&D investment is recent. They rely quite a bit on partnerships. Green Gold Asia, Roundtree Lab, a Ukraine supply deal mentioned. That brings counterparty risk, doesn't it?
Absolutely. Dependence on partners always adds risk. What about their actual structure? How are they set up?
It's a holding company, likely BVI or Cayman, with operations in China through subsidiaries. Jiangsu Lobo, Beijing Lobo, Wuxi Jinbang, Tianjin Lobo, Intelligent Robot.
Wow, okay, quite a few entities.
Yeah, Tianjin Bibosh handles exports. Guangzhou Lobo does the software. They talk about efficiency using OEM-ODM collaborations. But that multi-subsidiary structure definitely adds complexity.
For sure. Managing all those moving parts efficiently is key. Tianjin Bibosh sounds crucial for their global plans.
Definitely. Okay, let's shift to Chapter 2, Management. Who's running the show?
Right, the people aspect.
The CEO is Hua Jinashu. Seems very experienced, co-authored an e-bike charger standard, got a master's in total quality management. And here's a big one. He owns a lot of the company, like 43%.
Wow, okay. That's significant insider ownership, aligns his interests directly with shareholders.
Right. But interestingly, his reported cash compensation is quite low. He seems very bullish publicly about the company.
That low cash comp is interesting. Could mean he's betting on the stock value, but also raises questions about attracting future talent, maybe? Still, the high ownership is usually seen as a strong positive.
Then there's the CFO, Tong Zhu. Over 25 years in finance, worked at Caterpillar, manufacturing accounting experience. CPA in Australia, certified internal auditor.
Solid credentials. Caterpillar experience is definitely relevant for manufacturing firm aiming to scale. Her cash comp is low, too.
Also reported as relatively low. Seems like a pattern.
Okay. And the COO?
Jiankang Kai. Experience within Lobo subsidiaries, background in overseas business development. He also has a decent chunk of equity, around 8.23%. Again, low reported cash salary.
So operational experience from within, plus international focus.
Yeah.
Fits their expansion plans, and again, significant equity stake.
Yeah. Exactly. The board also have 3 independent directors, appointed in 2024. Board tenure is low, naturally, given the recent IPO, but their oversight seems pretty important for a microcap making big strategic moves, wouldn't you say?
Absolutely critical. Especially with such concentrated ownership and these new ventures, independent oversight is key for minority shareholders.
So overall, the exec team looks experienced in relevant areas, strong alignment via ownership, but those low cash salaries are definitely something to keep an eye on. Need to understand the full picture from filing.
Agreed. Total compensation matters. Okay, let's talk capital allocation. Where's the money actually going?
Well, a big chunk went to R&D, as we mentioned. That 500% plus surge in FY 2024, $1.6 million, aimed at innovation, like those AI-powered EVs, but it did contribute to the net loss that year. Long-term payoff, uncertain.
Yeah, big R&D spend is a bet on the future. Hope it translates to successful products. What else?
International expansion. They mentioned over 50 dealers internationally. That takes capital. And with only $1.4 million cash at year-end 24, you wonder how they're funding it.
Good question. That cash balance sounds tight for such ambitious plans.
Then there's the Roundtree Lab medical bed deal that needs capital for manufacturing setup. And there was an unconcerned rumor from StocksToTrade.com about acquiring a tech startup to boost AI R&D. Not officially verified, though.
Unconfirmed rumors. Always tricky. Raises disclosure questions if it's true and not announced.
Right. On the flip side, they did sell off some subsidiaries in FY 2024, brought in about $836,000, a capital reallocation move.
Okay, so some divestment too. And no dividends or buybacks, I assume?
Correct. Typical for a small growth company reinvesting everything.
So overall, it feels like a bold, maybe even high-stakes capital allocation strategy relative to their size, especially given the FY24 loss and negative operating cash flow.
Exactly. Lots of bets being placed. Now, corporate governance. FPI status.
Right. As a foreign private issuer, they get some exemptions from U.S. SEC rules. Governance standards might differ a bit from U.S. domestic firms.
They say commitments to U.S. GAAP and SEC compliance. They set up audit, governance, COP committees in 2023, adopted an equity plan in 2025. But effectiveness with the new board, TBD.
Yeah. Need to see it in practice. Diligence is warranted, especially with FPI status and being a microcap.
Any ethical red flags. They're listed as a Golden Plus supplier on Alibaba, excellent company. On a China credit platform, nothing major found.
That's good. But again, verify via SEC filings and fully understand that compensation structure in the Form 20F.
Okay, Chapter 3. Financial health. Let's get into the numbers. FY 2023 versus FY 2024.
Right, the historical performance.
Revenue was up strongly in FY 24, almost 37% to $21.2 million. That's the good news.
Okay, solid top-line growth. What about profitability?
That's where it gets tricky. Gross profit margin actually went down from 14.3% to 11.6%.
Margin compression while sales are growing. Not ideal. Why?
Well, operating expenses tripled, that huge R&D jump we talked about. Plus G&A cost nearly quadrupled to over $2 million.
Ouch, so that wiped out the gross profit.
Pretty much. They went from operating income in FY 23 to an operating loss of nearly $2 million in FY 24, and a net loss of about $845,000, roughly minus 10 cents per share.
So, a significant swing into the red. How did cash flow look?
Operating cash flow worsened, more negative, down to $2.9 million in FY 24. Investing activities used cash too. Financing activities provided cash, mainly the $3.18 million from the IPO.
So the IPO cash was crucial. Year-end cash balance.
$1.379 million, up because of the IPO, but that negative operating cash flow shows they're burning cash and relying on external funding right now.
Yeah, that $1.4 million cash doesn't sound like a lot given the burn rate and expansion plans. Okay, what about FY 2025 projections?
They're projecting a big jump.
Right.
Revenue, $28-30 million, up over 40%. And they're forecasting net income of around $3 million.
Wow, from an $845K loss to a 3M profit? That's optimistic. What's driving that?
They cite rising global demand, international expansion kicking in, operational efficiencies, new products like that high-speed motorcycle, AI EVs, and crucially, $11 million projected from the medical bed venture.
Okay, that medical bed revenue is a huge piece of that turnaround story. Makes it even higher stakes.
Exactly. The credibility of that turnaround really hinges on execution, major margin improvement, and that medical venture delivering. High risk.
Very high execution risk, especially in new markets and a new sector like medical devices. How's their overall financial stability look now? Liquidity.
That $1.38 minimum cash looks very low versus the burn-in plans. The current ratio improved to 1.52, but a lot of current assets are tied up in inventory and prepaid expenses, which aren't very liquid.
So liquidity looks precarious, reliant on that profit turnaround or more funding. What about debt?
Total liabilities to equity is around 1.58x. Not much interest-bearing debt, but significant other current liabilities, including some related to assets held for sale. Seems they rely heavily on trade financing, customer prepayments.
Managing working capital tightly then? Return on invested capital, ROIC?
TTM ROIC is negative, about negative 8.2%. Reflecting the FY24 loss. Needs to get positive and beat their cost of capital to create value.
Yeah.
That projected FY25 profit is a start, but sustainability is the big question.
Absolutely. Needs to be consistent.
Okay, let's try to frame this from an intrinsic value perspective, even preliminarily. Understandable business.
Core EV is pretty clear. Software and medical add complexity, but yeah, generally understandable.
Favorable long-term prospects. Durable competitive advantage.
That's tougher. Highly competitive markets, microcap scale, moat isn't proven, R&D push is recent, challenging.
Able and trustworthy management.
High insider ownership is a plus. Capital allocation is bold, high risk reward, trustworthiness, jury's out, depends on execution.
An attractive price, margin of safety.
Well, before the huge surge, the price sales was low, but they were unprofitable. After the surge, PS is around 1.09x based on the $2.68 price. If they hit that $3 profit projection for FY25, the forward PE would be around 7.7x.
So the margin of safety, whatever might have existed, got significantly squeezed by that price jump. Exactly. It feels much more like a story stock now. Trying to do a discounted cash flow model would be highly speculative with all these uncertainties.
Makes sense. Okay, quite a bit to digest there on the financials and valuation picture.
Definitely. All right, we've covered a lot in this first half, the business, management, financials. When we come back, we'll get into market sentiment, ownership, risks, and wrap it all up. Stick with us.
Yeah, we'll try to figure out what that huge stock move was really about. Don't go anywhere.
Welcome back to the Deep Dive.
Yeah.
Okay, Chapter 4, Market Sentiment. Let's talk about that stock activity. May 13th, that massive surge.
Right, the elephant in the room.
The stock IPO'd March 24 at $4. It then fell off a cliff, down like 80% before this explosion. Jumped from around 76 cents to hit $2.68 intraday. Something definitely flipped the switch on sentiment.
That kind of volatility, especially in microcaps in hot sectors like EV, isn't unheard of, but this was extreme. The long decline suggested pessimism, then this sharp reversal points to news or changed expectations.
What are analysts saying? Well, not much. Typical for microcaps. We saw a mention of a $4 target, but attributed to 0 analysts, which is odd.
Yeah, sparse coverage.
Investing.com's Investing Pro tool apparently flagged it as undervalued before the surge, but also noted the weak financials. And the CEO himself had said pre-surge he thought the valuation was deeply discounted.
So, limited institutional insight. Price, more driven by retail sentiment. News flow, maybe. The weak financials flag is important context for any undervaluation claim. CEO comments. Well, CEOs are usually optimistic.
True. What about short interest? Reportedly very low, like 0.08%. So probably not a short squeeze driving this. Options activity, details weren't available.
Okay, so not a squeeze. What did cause the shift? News flow seems key.
Yeah, it looks like a confluence of things. Official company news, positive FY25 guidance, the international expansion updates, that Roundtree Lab medical bed venture.
All potentially positive catalysts.
Plus, market news and rumors, particularly highlighted by StocksToTrade.com. Things like potential battery tech innovation, new global partnerships, supposedly positive feedback on some autonomous vehicle tech.
Autonomous tech, that wasn't mentioned in the core business overview.
No, it wasn't prominent in the other sources. And also, that unconfirmed tech startup acquisition rumor for AI R&D. Crucially, the battery tech and acquisition stuff haven't been officially confirmed by Lobo.
Right. Big difference between official announcements and unverified rumors, especially from trading-focused sites. That combo can definitely fuel speculative buying in microcaps. Need to be cautious about the unconfirmed bits.
Absolutely. Also, maybe anticipation of strong results, supposedly expected by unnamed analysts, and the CEO's deeply discounted claim priming the pump. But can this higher valuation stick? Potentially deliver, right? Sentiment might be heavily retail-driven here.
Very likely retail-driven with such low institutional coverage. Sustainability depends entirely on fundamental execution matching the hype.
Okay, let's look at who owns this thing. Chapter 5, Ownership Structure.
All right, who's behind the company?
It's controlled by a parent company, Welford Capital Ltd, holding about 47.23%.
Okay, a controlling shareholder.
And we already talked about the huge insider ownership. CEO Su with 43%, COO Kai with 8.23%. So insiders plus the parent control majority.
Limits the influence of public minority shareholders significantly. What about institutions?
Very, very low, like less than 0.5%, according to Fintel data, mentioning small positions by names like Citadel, UBS, typical for microcaps, but shows low validation from big firms.
Yeah, institutions mostly on the sidelines. There's also Streeterville Capital mentioned.
Yeah, with about 9.40%. The analysis suggests this is likely related to some kind of financing deal, not necessarily a long-term fundamental investment.
Okay, makes sense. What about recent insider buying or selling?
Limited details in the sources beyond initial holdings in that Streeterville filing. Monitoring future filings will be important for confidence signals. Form 20F is the place to look.
Definitely. So, implications for value investors. High insider parent control aligns interests but limits minority clout. Low institutional ownership signals higher perceived risk. Value folks usually like to see growing institutional interest based on fundamentals.
Exactly. Not quite the profile they typically look for yet.
Okay, let's pull it together. Chapter 6. Risk assessment. Time for a SWOT analysis. Strengths first.
Okay, strengths. Diverse product portfolio that focus on innovation with higher R&D, the medical tech diversification potential via Roundtree Lab, high insider ownership, international expansion efforts, and that affordable intelligence focus.
Good summary. Those are the potential positives they're building on. Weaknesses.
Weaknesses: that precarious financial position, losses, negative cash flow, low cash balance, unproven profitability at scale. There's small, limited resources versus giants, heavy dependence on partnerships, which carries risk, and the operational complexity with all those subsidiaries.
Yeah, those weaknesses are significant hurdles. Financial vulnerability is probably top of the list. Opportunities.
Opportunities: growing global EV demand generally, untapped emerging markets, tech advances in batteries, AI if those rumors have any truth, or if their R&D pays off. Success of the medical bed venture could be huge. And the shift to premium intelligent EVs in China plays into their strategy.
So, favorable market trends and the potential upside from their new ventures. Seems right. Threats.
Threats: intense competition everywhere. Geopolitical and trade risks, think U.S. tariffs. Regulatory hurdles both internationally for EVs and especially for medical devices in the U.S. An economic downturn hitting consumers. Supply chain issues, input costs, big execution risk trying to do all this at once, and that stock volatility making future funding potentially tricky.
That's a comprehensive list of threats. Competition and execution risks seem particularly potent, and those tariffs. We should probably circle back to that.
We will. So, Chapter 7, brief conclusion. What's the takeaway? Lobo has ambitious plans, no doubt, but they face really significant financial and execution risks.
High insider ownership is a plus, but the overall investment profile feels pretty speculative right now, especially after that price surge.
Yeah, the valuation picture changed dramatically. There's this real tension, isn't there,
Right.
between the potential upside story and the very substantial, tangible uncertainties.
Absolutely. It's a classic high-risk, potentially high-reward microcap story, amplified by the EV hype and this new medical angle.
And on that note, we want to leave as one final thought, something that might just make you reconsider everything.
The end took. This should be interesting.
Okay, here it is. Let's go back to those U.S. tariffs on Chinese EV exports. Even after that temporary reduction announced in May 2025, they're still substantial at 30%.
Right. Still a major headwind for exporting EVs to the U.S.
And remember, that big new medical bed venture, its target market is specifically the U.S. healthcare system. Now, future U.S. trade policy is, well, notoriously uncertain and politically charged.
True. Tariffs could potentially be extended or adjusted, maybe even impact medical devices differently down the line.
Exactly. So the big question for you to ponder is this: can Lobo truly hit those ambitious global growth targets and achieve the profitability they project while navigating this really complex, potentially volatile, and frankly, somewhat hostile trade environment, especially concerning the U.S. market?
That's a critical question. It really highlights how macro factors, geopolitics, trade policy, they can fundamentally impact a company's strategy and viability, regardless of their products or internal plans.
It puts their whole global strategy, and particularly the U.S.-focused medical venture, under a different light, doesn't it? Something to really think about.
It definitely adds another significant layer of risk and uncertainty to the whole picture, a crucial consideration for anyone looking at this company.
So if you found this deep dive into Lobo EV Technologies valuable, please subscribe to the Stock Analytics AI YouTube channel. We do these in-depth analyses regularly.
And you can find links to all the source materials we used for today's discussion right there in the description below.
We hope this gave you a much clearer picture of Lobo EV, the potential, the challenges, the risks.
It's a complex situation, and understanding all these facets is key.
And just a quick reminder, this analysis is based on information available as of May 13th, 2025. Things can change fast, and there are always inherent uncertainties. This is not financial advice. Always do your own research before making any investment decisions.
Absolutely. Thanks for joining us for the deep dive.